I think it is finally time to go long silver and gold miners. We have been in a slump for a long time and people were overly bullish gold and silver, but price action was not really supporting that thesis until last week. I love that silver broke below these lows and there were a bunch of stops sitting here and sentiment got overly bearish, but somebody was picking up the liquidity up here, and I'm assuming big boys were using all those stops to fill their large orders. So I would not be surprised if silver shoots up the next few weeks. Another reason why I am so bullish on gold is the COT report, the Commitment of Traders for Gold, from last week, from September 28th. And what I usually do is I take a look at the non-commercial positions and I divide the long open positions by the short open positions. And then it turns out to be a ratio. Currently, we are sitting at 2.35 to 1. At the height last summer, that ratio was almost 10 to 1. So everybody who was long gold capitulated. But there's more evidence that sentiment is totally bombed out. There's a dude called Mark Hulbert. He runs a column on Market Watch, and every once in a while he talks about sentiment in the gold industry. And he has subscribed to dozens of gold newsletters, and then he compares their positioning relative to history. And his indicator is called the Hulbert Gold Newsletter Sentiment Index. And the average has dropped to minus 45.2% this week. And the most important number is, because this doesn't tell us very much, but this number here is important. This indicator has only been lower than it currently is, 0.4% of the time since 2000. So all the gold bugs have given up. But there's more evidence. If we take a look at the implied volatility of options on SLV, on the ETF for silver, it has an IV rank of 15%, which means that 85% of the time options are more expensive than they currently are. So nobody is placing upside bets on silver. And I really like this setup, especially for the upcoming week, because on Friday we get the next non-farm payroll report. And I think that we are in a lose-lose situation when it comes to the job numbers on Friday, because if the numbers are too strong, it is not good for inflation. If the number is too weak, it is also not good, because then J-Powell has a problem with his attempt to taper. And if he were to delay taper, inflation would get even hotter. So I think J-Powell is trapped, and that is why I love being long gold, silver, and gold miners going into next week and for the next 6 to 9 months. There are 3 trades that I will place. I will buy October 8th 21 calls, and on Friday they went out at 22 cents. I will take a shot at those guys, because the implied volatility is just sitting at 25%, which is very, very cheap for silver options. I also want to give myself more time, and because of that, I will buy the January 2022 25 calls. On Friday, they went out at 32 cents with an implied volatility of 32%, which is incredible. And I think the risk reward here is excellent. But because I believe that the odds are pretty good that we will enter a stagflationary environment, and I don't know how J-Powell will react at first, because he will try to taper. The question is, how long will the market let him get away with it? And at some point, I think he will flip-flop again and then start to do more QE. And that is when gold and silver will really go nuts. And for that reason, I also want to go long options that expire June 2022. And here, I'm not going to go for naked calls. I want to buy the 25 calls, and I want to sell the 30 calls against it to create a call spread. So what we will be doing here is we are going to buy the 25 calls, and we are going to sell the 30 calls against it. And I would like to get that spread for 50 cents or less. And because the distance between these two strike prices is $5, if I can get that call spread for 50 cents or less, I will have a payout, a potential payout of 10 to 1 if by expiration silver, or SLV, the ETF for silver, is above 30. And the reason why I want to go long SLV calls versus GLD or GDX calls is simply because silver calls are cheaper relative to their historic averages than gold or gold mining options. And if we take a look here at the option chain for GLD for the ETF for gold, we can see here the IV rank sits at 49%, which means that half of the time options have been more expensive, half of the time they have been cheaper than they currently are. If we bring up GDX, the IV rank sits at 37%, so it's a little cheaper to buy GDX calls than GLD calls. But if we compare it, and let's bring up SLV one more time, if we compare it with the SLV implied volatility, here we have a value, an IV rank of 15, which means 85% of the time silver calls or silver options in general have been more expensive. So we get the best bang for our buck if we go long calls in SLV. And if you want to learn more about my fundamental thesis, why I believe that the odds of stagflation are pretty high, I recorded a video last week where I talk about that in more detail. I hope you find this helpful, but I would like to hear from you either way, even if you disagree with me. Comment in the section below, explain to me why I'm wrong, or if you do believe we have a good chance of gold and silver rallying, how would you play it?